So the crypto networks are proving their worth as a neutral technology platform. We're seeing donations of both Bitcoin and Ether to the Ukraine. I think it's 50 million, if I'm not mistaken, in the last week. And we're also seeing Bitcoin as a currency hedge for Russian citizens who are watching the ruble get hammered here. And, these are not the oligarchs. In fact, as we were discussing at our brainstorm today, there's not enough Bitcoin out there for the oligarchs to hedge. And they have been hedging for years anyway. This is for the average Russian citizen who actually is aghast, many of them, as we hear it, aghast at what's going on in Russia.
Bitcoin plunged to below $38,000 in March, giving up all the gains it had made last week, which saw Bitcoin rallying over $45,000. The losses appeared due to sell-offs across the risk-on markets, led by the 18% rise in international oil benchmark to almost $139 per barrel, its highest level since 2008. Nonetheless, Bitcoin's inability to offer a hedge against the ongoing market volatility also raised doubts over its safe haven status. But recently, Cathie Wood spoke about Bitcoin, inflation, and increasing interest rates, and why she still expects to see spectacular returns in the next 5 years. Hello and welcome to Money Talks. In today's video, ARK Invest CEO and CIO Cathie Wood speaks about fears of inflation, rising interest rates, the velocity of money, Russia-Ukraine situation, how innovation solves problems, and more. Cathie Wood also shares her take on monetary policy, market signals, economic indicators, and innovation during periods of heightened volatility. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
Commodities, they're on fire. We believe this is a supply problem, much more than a demand problem. I'm sure there's a scramble to build inventories of anything now, anything in the energy complex, any of the metals that come out of Russia, food out of the breadbasket of the Ukraine. Interestingly, the commodity price increases are in the face of the dollar increasing. The dollar increasing tends to put pressure on prices, but this supply problem and maybe inventory hoarding is overcoming that. The dollar is going up because it's a flight to safety currency. And we're also seeing other flights to safety. So the dollar's up about 2.5% since the end of January, when the Russia-Ukraine issues were becoming more obvious. And then the other two flights to safety we've seen, Bitcoin 6.1% and gold 8.3%. So those are the markets. I'll give you the top and bottom sectors, at least for the S&P 500, over, year to date. And no surprise, given what has happened to the energy price, energy is the only sector that's up. It's up 33%. And consumer staples and utilities are fill out the top three. They're down just a bit. So that's an interesting combination. Energy, we know what's going on there. Staples is a very defensive sector. That says that investors are becoming somewhat concerned about the economy. And utilities are interest rate sensitive. So when interest rates go down, utilities dividend yields look better and better, so they tend to outperform. Now, in a rising inflation environment, interest rates are not supposed to come down. And at the short end of the curve, they are not coming down, but at the long end, they are, and we'll get into that in a bit. The worst performing sectors are associated with the consumer. Again, I think the loss of purchasing power is a big problem for the consumer. So consumer discretionary, consumer services, and technology, which despite innovation getting a booster shot from problems, as innovation solves problems, it is a high beta sector. And so many investors just shy away from it when trouble seems to be on the horizon. The Fed would raise interest rates. He also did say, when asked the question in his testimony, that he would get aggressive if inflation seemed to be embedding into the system in a 70s-like scenario. Well, we thought about the analogy to the 70s, and we know a lot of, especially old-time investors who were around during the 70s, are forecasting just that, inflation embedded in the system at a much higher than expected rate. We are not expecting that. Why? It comes back to this concept of velocity, the rate at which money turns over. So I did a little more homework on velocity in the 70s. Actually, the increase in velocity started in the 60s. And in the fourth quarter of from the fourth quarter of 64 to the first quarter of 81, velocity increased 21%. So the rate at which money turns over in the economy. And what that meant at that time, at least, is many people used to buy, as soon as they got more income, they would buy goods and services, and especially goods, right away, as quickly as possible, because they were afraid prices would go up or interest rates, in the case of cars and other durable goods, would go up. So buy now before prices and interest rates go up. I think the prices alone will destroy a lot of demand for oil and accelerate the shift to electric vehicles. And especially, we believe robo-taxis will be electric, and they'll be on the road 50 to 60% of the day. So that acceleration away from oil will happen as we move into the autonomous realm. We're seeing a lot of talk about renewables, especially nuclear, to reduce dependence on Russia. Of course, solar and wind, but I think nuclear is becoming less of a negative, even to some environmentalists who have studied it a little bit more carefully. We're seeing, of course, the social platforms providing real-time updates and providing, a glimpse into the horrors that are taking place there. And I think that has put a lot of pressure on financial institutions and others to boycott or stop doing business with Russia. It's terrible for the Russian citizens who do not want this invasion. But I think we've never seen the financial system used as such a weapon, and we'll see if it works.
Cathie Wood defended her firm's innovation-focused portfolio, saying she sees spectacular returns for ARK Invest over the next 5 years. Her comments come after her firm's flagship fund has been caught in the recent tech-led sell-off. The ARK Innovation ETF has nearly halved in the past 12 months. In comparison, the benchmark S&P 500 is up nearly 15% in the same period. Wood said the world is currently facing all kinds of problems, and innovation is set to be the answer. She pointed to the ongoing war in Ukraine, which has triggered a surge in prices for some commodities like oil. Wood said the conflict is set to lead to a lot of demand destruction and substitution into innovation, such as a switch toward electric vehicles away from those that are gas-powered. So what are your thoughts about inflation and interest rates? Do you agree with Cathie Wood? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.